Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into Transocean's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Transocean, a leader in offshore contract drilling services, has just released their Q1 2025 earnings. There's a lot to unpack, from revenue figures to strategic insights.
Revenue and profitability overview. Let's start with the top line. Transocean reported contract drilling revenues of $906 million for Q1 2025. How does this compare to previous quarters, and what does it mean for the company?
Transocean's revenues decreased by $46 million sequentially, primarily due to lower revenues from a rig undergoing contract preparation and mobilization. However, compared to the same quarter last year, revenues increased by $143 million, indicating a positive year-over-year growth. The adjusted EBITDA came in at $244 million, with a margin of 26.9%, reflecting solid operational performance despite the challenges.
And what about profitability?
The company reported a net loss of $79 million, or 0.01 cents per diluted share. After adjusting for discrete tax items, the adjusted net loss was $65 million, or 0.01 cents per share. This is slightly better than the forecasted EPS of -0.12 cents by analysts.
Operational efficiencies and future outlook. John, can you elaborate on Transocean's operational efficiencies and their future outlook?
Certainly. Operating and maintenance expenses increased to $618 million due to an unfavorable legal outcome and increased costs related to a rig in the shipyard. However, general and administrative expenses decreased to $50 million thanks to reduced legal and professional fees. CEO Jeremy Thigpen highlighted the company's solid quarter and the repayment of $210 million in outstanding debt, which strengthens their balance sheet.
What about their future outlook?
Despite uncertain macroeconomic conditions, Transocean is well-positioned to navigate the evolving landscape. They continue to engage in constructive conversations with customers for future opportunities, which bodes well for their long-term prospects.
EPS forecast and analyst expectations. Let's discuss the EPS forecast. Analysts had predicted an EPS of due. How did Transocean perform in this regard?
Transocean reported an adjusted EPS of 19 cents, beating the forecast by 0.2. This slight outperformance is a positive sign, indicating that the company managed to control costs better than expected, despite the challenging environment.
How are analysts reacting to this performance?
The sentiment is generally positive. Beating the EPS forecast, even by a small margin, suggests that Transocean is effectively managing its operations and financials, which is encouraging for investors.
Key takeaways. In summary, Transocean's Q1 2025 results show a company that is navigating challenges with resilience. With revenues of $906 million and an adjusted EPS of -0.10 cents, they have outperformed analyst expectations. The repayment of $210 million in debt further strengthens their financial position.
Absolutely. While there are challenges ahead, Transocean's strategic initiatives and operational efficiencies position them well for future growth. Investors should keep an eye on their customer engagements and market conditions.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Transocean's performance in the comments below.